these people don't want to go to a gym anymore. What can I give them? And the answer is Peloton, because there are almost no competitors to it. You have Apple Fitness, and I'm sure that there will be competitors coming from the likes of Google and some of the other fitness companies as well. But really, Peloton is the biggest one by far. Of course, there is potential, and I do look at the valuations of companies and think, this is quite expensive. But I don't think it's ludicrously expensive. I don't think it's a time to be super defensive right now. And so, yeah, I'm still pretty optimistic that the markets are quite healthy at the moment. When you think about what is a government going to use if they want to create a digital pound or a digital dollar, it's going to be Ethereum, because it's just got the most support, the biggest developer network. It's the easiest to use. It's the easiest to get adoption on. Stop looking at prices and start looking at market cap. Market cap is the only metric that you should be measuring by in terms of the growth of a project, because they can release more tokens, and if they release more tokens, then it devalues everyone else's token.
There might be a lot of people who are watching this that it's easy for Jay to buy Bitcoin, or to say to hodl Bitcoin, because he was there since 2013. What's compelling you still right now, even if you bought at massively lower prices, to still come in, given that it's more than 1,000 times higher than where it was in 2013?
Well, you've got to think about when you do an investment, what you're really doing is you're taking a risk, and you're paying, you're getting a discount on your investment based on the amount of risk that there is. So if you invest in 2013, at the time there were about 3 or 4 real Bitcoin exchanges, Bitstamp, Mt. Gox, which we all know, and Bitfinex and BTCE. Those were like the 4 big exchanges that existed at the time. When you looked at those exchanges and who was running them, all of them were just full of crooks and criminals, and everyone knew it, really. Everyone kind of felt like, this is scary. And when you looked at wallets and how to store it, you used the Bitcoin Core wallet. That was what there was. You used Bitcoin Core, or you used a really brand new cutting edge cold storage wallet. And those were your options. And that's the kind of risk that you were talking about back then. So obviously the discount that you're getting on, like, if this thing turns out well, the discount you were getting was huge, because the risk was absolutely huge. There is still risk there, but the risk is very, very different now. You're talking much more about risk from regulation and things like that. It's no longer a risk of, is this thing going to work, and is it going to be adopted? Or is there going to be some catastrophic bug that makes the whole thing go to zero overnight, right? Those aren't really big risks anymore. The big risks now are regulatory pressures and custodial stuff of making sure that your coins are stored in a safe way. So as a result, the reward is going to be smaller, but the risk is smaller as well. So I think it's still a good investment, and if you're seeking something more risky than that, there's still other opportunities elsewhere in crypto outside of the big names like Bitcoin and Ethereum, especially in the dApp space. I think the dApp space is not even remotely mature yet, and there's going to be some. We're still going to have essentially companies like Google built on top of cryptocurrencies, and those companies are out there to be found by people. So if you want to take big risks, that's the way you can go. But Bitcoin is still a great investment for people that want crypto exposure but want to be a bit safer.
I like Michael Saylor. I like when he said that Bitcoin is a bet on the next 100 years. It's low risk, high upside. I want to transition into stocks. Fourth quarter of the year, what's your approach? I've seen your tweets. You've been pretty much bullish on Ford at some points this year. What's your strategy coming into this? That the markets just keep going up. There are pullbacks here and there, but from the time we did a video last year, it's massively more expensive now than where we were last year.
I think there's still bargains out there to be found if you're looking in the right places, though. And one example that you've probably also seen me tweeting about a lot, I think, is Peloton. Peloton is down this year. Peloton is down 27% year to date, roughly. I think it might be a bit higher after yesterday, actually. But so if you thought Peloton was a good investment, in 2020, then it's an even better investment now because it's cheaper than it was at the end of 2020. And you know, I think there's similar stories like that across the market, because you've seen this kind of backwards and forwards between the opening up stocks and the closing down stocks related to COVID, right? The stay-at-home stocks or the go outside and have fun stocks. And I think that really, you know, if you properly analyze what's going on with COVID and how businesses and how people are reacting to the changes that have come from COVID, the working from home stuff, then you can, I think that there's a real opportunity in those kind of stocks that take advantage of that movement, because I think that what happened with COVID forced a big change in thinking about how we work and where we work and how we entertain ourselves and where we entertain ourselves. And I don't think that's going to change. There are still going to be people that want to go to the office. There are still going to be people that want to go to the gym. But I think that there are more people that now think, you know what, I'd like to do some of that at home, or I'd like to do all of that at home. The same with meetings, you know, the things like Zoom, right? I think that the cat is out of the bag now, and I don't see that trend reversing. I don't think it's very likely that people are going to want to shift back to work overall. And actually, you see that in jobs numbers and in how companies are behaving as well, right? So companies are actually having to guarantee staff members a certain amount of days working at home to even get people to apply for their jobs now, because people are demanding it. So yeah, if you look at the stats around jobs, I think that's the trend that I'm looking at, and that's the way I see things going. So I think there's still a lot of potential out there in the market.
If you describe it in one sentence or in one idea, what's the one striking idea that's causing you to be so bullish at it that even if it's dropping, you have so much conviction to add and build a larger base on it?
So first of all is the general business model, right? They build a machine for exercise. They build a bike, they build a treadmill. They're working on other stuff as well. You buy it and then you pay a subscription fee to exercise on it, and it has live streaming videos and tutorials on how to use it and, you know, what exercise to do. And the long-term revenue from that is insane, because you make a tiny bit of profit, a very small amount of margin selling them the hardware, and then after that your costs are minimal, because you're just paying a few people to make videos and stream these live training sessions, and that's it. That's your costs, and you're charging people a subscription fee. So it's similar in many ways to something like Netflix, for example, except that the content ages even better than Netflix content does, and the content is easier and cheaper to produce than Netflix content. So that's the first thing. The second thing is it ties into this trend of staying at home, not just from people themselves individually saying, I'm going to go and buy this piece of equipment and exercise at home, but companies now whose employees are demanding it. Companies used to give their staff gym memberships or discounts on gym memberships, and now those companies are thinking, well, these people don't want to go to a gym anymore. What can I give them? And the answer is Peloton, because there are almost no competitors to it. You have Apple Fitness, and you know, I'm sure that there will be competitors coming from the likes of Google and some of the other fitness companies as well. But really, Peloton is the biggest one by far. So that's another thing that really plays into it. And the last thing is really the strength of their brand. There are a few different measures that you can look up online of people who measure the most valuable brands in the world and the brands that have the most brand loyalty. And Peloton is at the top of almost every single one of those lists. In terms of users, they have a churn rate, so people dropping out of the platform, of roughly 0.8%, I think it is. So, you know, a very, very, very small number of people leave the platform. It's incredibly sticky. Once you've got it, you stick to it. And also, it's like a psychological thing, right? Who's going to buy an exercise bike and pay for a subscription and then think, actually, no, I've decided I'm going to stay unhealthy and fat, and I'm going to cancel it? No one, because everyone wants to think that they're going to get healthier and that they're going to exercise and that they're going to use it. And getting rid of that subscription is like an admission of defeat. So the product is incredibly sticky. People will keep paying for it, even if they don't use it, but they do use it. So yeah.
I was supposed to say, guys, copy JayNemesis. But any update on that? When's the copy block coming out? It's been 3 quarters since the block.
Yeah, I don't know. So the thing is, a lot of people I think get confused about it, and they think that the copy block is there because too many people are copying me. It's not about how many people are copying me; it's about how much money is copying me. And really, it's like a logistical thing. It's not that eToro are thinking, oh, that's enough for Jay. He's making lots of money. We don't want him to have any more or anything like that. It's a case of making sure that when I'm trading, I'm not moving the markets, and that eToro can actually fill the trades that I'm putting to the market, and that I can still invest in reasonably, small companies. Because if I'm managing, $5 billion and I want to invest in a company that's only worth 250 million, that's not going to work, So it's really a kind of a logistical thing, and eToro working on their infrastructure and really expanding it and thinking about how long term do we move forward from this. But yeah, as a result, I don't see it changing for a while, because currently I'm managing around 150 million, and even though my copiers have fallen and people have decided to leave or take profits or whatever, that number has basically stayed the same. So yeah, for the time being, I don't know when it's going to happen. If you do copy me and you want to take profits out, the one piece of advice I would give you is just leave, even if you just leave like $5 in there. That gives you the opportunity to add funds to it again later. So if you want to take profit, by all means take profit, but just leave something in there, even if it's totally tiny and meaningless and won't do anything. It's like a ticket for you to reinvest in me later on.
I'm getting so many messages. When's the copy block coming out? So I actually don't know also what to what to say in it. But it's awesome when you're talking to the rock star in the whole of popular investing platform. Anyways, I've been observing your portfolio, and I'm so curious about, do you have like a system towards it? I've noticed the way you would allocate is, most of the time you have your top 3 stocks in terms of allocation get around 25%. Then you have your middle tier, which is about 8 to 10 stocks that comprise around 30 to 40% of your portfolio. Then the remaining ones, which is about 1% each, comprise the rest. Is there a system behind that?
Kind of, yeah. So I think when you're an investor, it's very hard to track 50 stocks really, really well. It's impossible to stay on top of all of the news, all of the earnings, all of the corporate decisions that are being made, acquisitions. When you think about the amount of news that you would have to consume just to stay on top of it, it's an awful lot. So it's about choosing the things that you want to focus on and choosing the things that you're most confident on. And so most people do this, and it's usually referred to as like a core satellite kind of system for setting up a portfolio, where you have your core positions and you have smaller positions outside of that. And so yeah, that's what I do really. I have positions in, there's normally 2 to 3 top stocks, as you said, and then I have a kind of a tier just below that, which have 3 to 10 companies in it, and then another tier below that maybe has another 10 companies in it, and then the bottom tier, which really is just, I feel like I should have exposure to this thing because I think it's a growth industry, and it's more that you're bullish on, for those kind of things, it's normally more that you're bullish on the industry rather than the company, because you can't expend that much effort researching an individual stock if it's only 0.25% of your portfolio, right? So you can't spend like hours and days poring over everything and researching it and thinking, aha, I like this, I'm going to invest this tiny part of my portfolio. So it's more about identifying a trend that you like and being like, I want exposure to that. I think this stock is probably the best one that I can see at a glance in that market, so that's the one I'm going to go for. Or sometimes I even go for multiple. So if you look at some of my lower stocks, for example, railways, I have exposure to CSX and I have exposure to Union Pacific, 2 big US train companies. And the reason I have exposure to both is that I'm just bullish on railways, and on freight rail. And so, I picked CSX as my favorite, and then afterwards I thought UMP is pretty good as well. I'm not sure which one's going to perform better, so I'm going to go with both.
I mentioned earlier that we've seen markets, not just in crypto, but in US markets, push massively up. are you taking a lot of profits at the end of the year at some point, or you're just gonna roll everything over, considering that there's still a lot of money going around, especially in the US?
First thing is you've got to think about the kind of economic cycles of the markets, right? And so you get these bull markets that generally last between 8 and 12 years. And so when you think back to 2008 or something, you could argue we are due a big correction or a bear market. Now, you could also argue that maybe COVID was that, and maybe COVID even still is that, because there are a lot of companies that are still down from COVID in a lot of different sectors. And perhaps it's just that we've actually managed that incredibly well, and the central banks have done a good job, and the governments have done a good job of managing that kind of bear market, and that actually we're in a bear market at the moment, even potentially. And it's just not a bear market like you would normally expect it to be. And maybe we've already, come out the other side of it. And we're already looking at the start of a new growth phase. So I think, that's something to bear in mind, is that maybe we've already gone through the downturn. The other thing is, I guess, looking at it geographically as well, and saying, if there is a downturn, which regions are going to be the ones hit hardest. And I think you're kind of seeing that a bit in China recently, that they're really struggling off the back of a kind of collapse in housing to some extent, and regulators pushing harder on some of the tech companies, and you've got the ongoing situation of the West kind of distancing themselves from China after COVID. So you could say that maybe that's where the bear market is really occurring, and that actually most of the bear market is taking place in some of these other markets. And that when you look at the kind of companies that are in the US, most of them are tech related. Most of them are companies that are taking advantage. It's certainly by market. If you weight it by market cap, most of the money is taking advantage of what's been happening in the world, and the kind of transformation to electric cars, and to working from home, and entertainment from home, gaming, all of those things. They're in US-based companies largely. So that's the way I kind of think about it. And of course there is potential, and I do look at the valuations of companies and think, this is quite expensive. But I don't think it's ludicrously expensive. I don't think it's a time to be super defensive right now. And so, yeah, I'm still pretty optimistic that the markets are quite healthy at the moment. But we'll see, we're still watching what happens with inflation and things like that as well. So there's a lot to monitor at the moment. And this year, as someone who's kind of managing a portfolio, it has been a much more difficult year than 2021 for me.
Is it because of a higher base also from last year, or there was just really a bigger drop also last year? That's why it was easier relatively to position lower?
It was obviously easy for most people to identify in March that was a good time to buy last year, when COVID was happening and people saw the stock market down. And even when the stock market was up by 10%, you could quite easily justify, actually, the world hasn't stopped. There are still companies out there making good money. And you could justify investing. I think really you've just got to look at, what are the trends that are going on in the markets right now? We still have this trend towards becoming climate neutral across the globe. So I'm extremely bullish on those sectors. We have these ongoing trends in working from home and stuff like that, and those were much easier to identify in 2020 than they are now, because now everyone's aware of the work from home trends. Now everyone's aware of what's going on with climate change. Now the US election is done, so you don't have that opportunity to think, what's Biden going to invest in, right? He's probably going to be investing in infrastructure. So you invest in infrastructure, but you don't have that option now. So that's why 2021 is more problematic. I think you have uncertainty around central bank policy and when interest rates are going to change. You have uncertainty around what's going to happen to this work from home trend. Is it going to reverse? So we're going to see people go back outside. You still have uncertainty around the companies that are shopping centers and things like that, and housing markets. What's going to happen with those? We saw housing markets boom in some countries and go down in other countries, and in different regions you saw city prices going down in the UK, and you saw houses out in the countryside going up in value. But all of those things were so much easier to identify in 2020 where the direction and which way they were going to go than they are now, because now we're facing this big monumental shift in the way that people work and live, because that was brought on by COVID, and it's just about, do we change back or do we keep going in this direction? And identifying that is very, very difficult this year, and that's why the markets, I think, are harder to trade this year.
There are a lot of Filipinos watching this, and then a lot of people also from Asia. If there's one thing that you would want to inspire them on, and if there's one trait that you would want to impart to them that this has made JayNemesis,
the secret sauce is to be interested. I think that's the secret, is to be interested. Be interested in what's happening in the world. Be interested in, the direction that societies are moving in, the direction that governments are trying to take their countries in, or that citizens are trying to drag their governments in some cases, and identifying, what's going on in those different regions. Who are the people that are going to win from this situation? Or is the situation about to change? Is there about to be a swing that moves it in another direction? And you have to be interested in that in order to really, benefit from it. You have to, the reason that I invest so much in tech is because I love tech. I've always loved technology. I've always been, a futurist. I like to think about what's going to happen in the future. Are we going to have flying cars, or, and so as a result, in my spare time, when I'm not staring at charts and fundamentals of companies and balance sheets, I'm on YouTube watching videos about what the next technologies are, or what the next social policies are even for governments, because all of these things tie into the markets and what drives markets and what motivates people into what products they're going to buy, what products they want, what's going to improve people's lives. And that's the way that I look at it. And that's how you find opportunities like AMD. You see this growth in gaming. You see this growth in computers being used to power cloud storage and cloud computing and Bitcoin mining, right? And you identify that trend because you're passionate about finding out what the latest processor is. And the same with solar. You identify, okay, like, ooh, we need to move to renewables. A lot of countries are doing this. Which ones are doing it first? Which ones are best situated to have solar? Which ones are well connected to other countries so they can export that solar? Which are the companies that are building batteries? And you just have to be interested in it to really benefit the most from that. Because if you're researching these things for fun, then it makes investing in them a lot easier.
Of course, they can't copy you, but you can follow him in eToro. But what are the other avenues where they can reach out and also touch base with you?
Yeah, so I have a Discord server that's really active community. Great place to come and talk about trading ideas, or just talk generally, or hang out, ask me questions, ask the community questions. So yeah, I encourage you to join the Discord. I'm super active on Twitter. Twitter is where I post the most. I love Twitter. I saw you join me in a space the other day. I was checking out a space, and then I saw you join it and also check it out, which is quite funny. And
just to everyone watching this, if JayNemesis would comment or DM you giving you a trading bot technique, that's not him. There's so many people pretending to be people and just trying to scam. So just so you guys know, those are the only official channels where you can reach him. He's not gonna give you magically 100 Bitcoin or 100 ETH.
I'm not investing for anyone outside of eToro. I don't do any of that stuff. I'm glad you brought that up, actually, because there was another person who reported to me this week that he got scammed out of a lot of money, an awful lot of money, by these guys impersonating me, apparently on Skype this time. So yeah, I don't use Skype. That's like 1990s. I'm on Discord, I'm on Twitter, and if you're unsure, do message me. I can't guarantee that I'm going to respond, but if you think that you're speaking to me somewhere and you're not sure if it's really me, then message me. And of course, the golden rule is like, if it sounds too good to be true, it probably is.
Just for everyone who's watching this, so what they normally do is they would look at the list of followers already that's currently following. Then they would follow that with the same picture, and then they're thinking that it's really Jay or this person sending the DM. So please be wary if Jay is the one that's initiating it. I guess that's one red flag already of sorts. So there, and yeah, like Twitter has emerged. I sort of abandoned it a couple of years back. Then somehow everything's there. Crypto community's there, NFT community's there. Everyone's on Twitter. Thank you, Jay, and it's an honor. Probably we'll have you back a couple of quarters, months from now again, but it's always an honor to have you. And to everyone, guys, leave your questions if you have any. Then we'll try to figure out a way of how we can answer those questions as well. So thank you, JayNemesis, and to everyone watching this. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.